50% chance Alphabet beats earnings due to strong AI leadership and stable ad revenue, though rising costs from potential tariffs introduce some risk. 30% chance Alphabet meets expectations, which could still result in a stock drop if expectations are too high or if margins are impacted by higher costs. 20% chance Alphabet misses earnings due to AI competition, macroeconomic uncertainty, and potential cost increases from tariffs. Alphabet Incorporated, NASDAQ GOOGL, is set to report its Q4 2024 earnings on February 4, 2025. Investors and analysts are closely watching whether the tech giant will beat expectations or fall short, given its recent AI developments, expansion in autonomous driving, competition from emerging AI models like DeepSeek, and the potential impact of new tariff policies. In this analysis, we will break down Alphabet's strengths, weaknesses, and market trends to determine whether the stock is a buy, hold, or avoid ahead of earnings. Alphabet GOOGL buy, hold, or avoid. Verdict: buy. Based on Alphabet's financial stability, dominance in AI, and strong revenue diversification, I expect Alphabet to meet or slightly beat earnings expectations. However, risks such as AI competition, regulatory scrutiny, and potential cost increases due to tariffs must be considered. Expected Q4 2024 earnings results. Estimated revenue, $87.5 billion, 7.2% year-over-year growth. Estimated EPS, $1.55 per share. Cloud and AI revenue growth, 18% year-over-year. Advertising revenue, flat to slight increase, 2 to 4% growth expected. Key catalysts affecting Alphabet's performance. Google Cloud's performance, rising competition from Microsoft and Amazon. AI and search leadership, impact of DeepSeek and OpenAI on Google's core search business. Waymo's expansion, potential revenue opportunities in autonomous driving. Potential cost pressures from tariffs on imported technology used in data centers. Strengths, why Alphabet could beat expectations. Alphabet has been executing well on multiple fronts, positioning itself as a long-term AI and cloud leader. Here's why the stock looks strong going into earnings. AI and search dominance. Google's competitive moat. Despite growing AI competitors like DeepSeek and OpenAI, Google Search remains the global leader, with over 90% of market share. Google has launched AI-powered search results under Google SGE, Search Generative Experience, to protect its advertising moat. DeepSeek AI's rise in China has put pressure on Google, but it currently does not threaten Google's global dominance. Key takeaway: Alphabet's ad revenue should remain stable, even as AI search challenges emerge. Google Cloud growth, a key earnings driver. Google Cloud has been growing at approximately 18% year-over-year, making it Alphabet's fastest-growing segment. However, Microsoft Azure and Amazon AWS still dominate, meaning Alphabet must continue scaling its cloud business aggressively. Key takeaway: if Google Cloud outperforms expectations, Alphabet will likely beat earnings. Waymo and autonomous driving expansion. Waymo recently expanded its robotaxi services to Los Angeles, opening new revenue streams. If Waymo reports stronger than expected performance, it could boost Alphabet's stock. Key takeaway: Waymo is not yet a core earnings driver, but its growth potential is a long-term bullish factor. Weaknesses, potential risks and why Alphabet may miss expectations. Despite Alphabet's strengths, there are some risks that could hurt earnings performance. AI competition, DeepSeek, OpenAI, and Microsoft threats. OpenAI's ChatGPT and China's DeepSeek AI are rapidly gaining traction, potentially threatening Google's advertising revenue. Microsoft has integrated AI deeply into Bing, taking search share from Google. Risk: if AI competition weakens Google's ad revenue, Alphabet may miss earnings expectations. Digital ad revenue growth is slowing. Google's ad revenue is expected to grow just 2 to 4%, a much slower rate than previous years. Economic conditions, including consumer spending slowdown, could hurt digital ad spending. Risk: if ad growth slows more than expected, Alphabet may miss expectations. Tesla earnings miss, negative tech sentiment. Tesla's recent earnings miss has caused volatility in the broader tech market. If Alphabet's numbers aren't strong enough, investor sentiment may turn bearish on the stock. Risk. Even a small miss on earnings or weak future guidance could hurt Alphabet's stock price. Tariff uncertainty and cost pressures. Potential tariffs on imports from China, Mexico, and Canada could impact technology companies, raising costs for data centers and AI infrastructure. If tariffs are implemented before Alphabet has had time to adjust, they could negatively impact margins. Risk. Higher operational costs due to tariffs could reduce profitability, even if revenue growth remains stable. Final prediction. Will Alphabet beat earnings? Given Alphabet's strengths and challenges, here's my prediction for earnings. Base case, most likely Alphabet meets or slightly beats expectations, $87.5 billion revenue, $1.55 EPS. Bullish case, Google Cloud growth surprises to the upside, and the stock rallies post-earnings. Bearish case, weak ad growth, AI threats, and tariff-driven cost increases hurt earnings, and the stock drops 5 to 8% after earnings. Conclusion. Should you buy Alphabet before earnings? Buy if you believe in Alphabet's long-term AI dominance and revenue diversification. Hold if you are cautious about AI competition, ad slowdown risks, and the potential impact of tariffs. Avoid if you expect Alphabet to miss earnings or believe AI search disruption and increased costs will significantly impact profits. Final thoughts. Alphabet remains a strong tech stock, but AI competition, ad growth, cloud revenue trends, and the potential impact of tariffs will determine whether it beats or misses earnings expectations. If Google Cloud and AI investments deliver, Alphabet could outperform in Q4. However, AI search threats, ad spending risks, and tariff-related cost increases remain key concerns. Do you think Alphabet will beat earnings? Share your thoughts in the comments. Stay tuned for Alphabet's Q4 earnings report on February 4, 2025. Disclaimer *: This analysis is for informational purposes only and does not constitute investment advice. Please consult a certified financial advisor before making any investment decisions.